Welcome to Investment 360. Joining us now on the desk is Stephen Meintjes from Imara SP Reid, and we are looking at his stock picks for October and going forward. Firstly, I'd like to talk about your general macro view and why you are still in equities. Does this mean that you don't think that the world is going to fall apart into a million pieces?
Well, partly that, and also it's just getting more and more difficult to panic these days. How do you do that?
You look like a seasoned investor, so I'm sure you've been through many tough times.
Yes, fortunately or unfortunately.
Okay, so just your general sense, do you think that we are going to head into a significant slump, or do you think that the markets now have reached a fair bottom in a sense?
Well, I think a lot depends on the comprehensive solution from the Europeans that they are sort of hinting and whispering about. Probably what will happen is they come up with a half-job, a half-baked solution with promises of more to come. And then you could get quite a rally because we are quite oversold.
Fantastic. So let's get into your stock picks. I'd like to start off with BHP Billiton. You have a buy on BHP.
Yes. Well, the talk from visitors to Billiton in Western Australia last week is that they're still selling iron ore at $170. So iron ore and coal are certainly holding up very nicely. We've seen the copper price and the oil price coming down, so that'll hit them a bit. But otherwise, they've got massive expansion, and the valuations are very undemanding.
I see also that you have exposure to industrial metals. So you have Anglo, Billiton, Azure, and Exxaro, and you also have exposure to gold. So you have industrial metals that react well when the economy goes up, and you have gold, which should react well when the economy is as bad as it is. It seems to be a natural contradiction. Could you expound on that?
Well, the gold price is really a function of the financial crisis and turbulence and worries over budget deficits, whereas the commodity prices, yes, we've seen the base metals and some other commodities coming down, but as I've said, others, the bulk commodities, which are not traded and where you can't get quite so much or any speculation in, are holding up very nicely. And those stocks there are quite geared. Some of them are going to be increasing production a lot. I mean, Exxaro, for example, has got Medupi, the coal mine for Medupi coming on stream in May next year. And it'll ramp up from, well, up to, in 2-3 years, up to another 14.5 million tons. So that's a big chunk of extra volumes. And then, of course, your iron ore companies, Kumba and Assmang, which is owned by Assor and ARM, they're also ramping up production nicely.
Interesting that you've got exposure to gold through DRD Gold. What is the thinking?
I'm going to ask that too.
What is the thinking behind that? I mean, you've got a buy on this stock. It's fascinating because it's had troubled times. We know that it's busy with reprocessing plants. What is your sense? Tell us why you've picked this specific company.
Well, it's counterintuitive, but it's not as risky as your other gold mines because it's virtually a surface dumps operation, recycling, and they're ring-fenced lay-fors while they have negotiations with the government and the trade unions and Eskom as to how to keep it going. But they're not going to lose any more money on that one. And the surface dumps is operationally, the risk is minimal.
Vickers, do you agree with that? Do you like DRD Gold? Is it a company that you would look at?
It's not something that I've followed, so I'll take a break from that one. What I would say is I think that it is a lot less risky because of the cost factor, because the biggest problem for South African mines has been the fact that costs have been running away while the exchange rate really haven't given them much of a break. So the underlying commodity prices have been good. But the rest haven't come to the party. So I would say that if you're mainly processing on top, that would certainly reduce your risk because the cost factor is just much less.
And Claire, look, you said that you were going to ask that. So, DRD, do you concur with what Stephen has said?
I don't really know much about DRD. All I know is that it's just had so many years of underperforming from a fundamental standpoint. It just doesn't seem to deliver on what investors want it to do. But you have a significant holding in there, so I was interested in knowing if this is something that has to do with the company getting better, or is it just the gold price rising up and making a marginal gold company better?
No, it's very definitely a change in the composition of earnings. It's a huge change in the nature of the company, much almost entirely now surface dump recycling.
I've seen you also have exposure to goldfields.
Yes. We think that South Deep is a very exciting situation. It's steadily coming on stream. One of our analysts was down there last week, and there's a huge underground cavern there where the reef fans out, and it's incredibly wide. So they're going to get a big, steady increase in production over the next 5 years from that.
Right, we're taking a very short break. When we come back, we hear more from Stephen Meintjes, and we'll figure out what his spec buy is. Don't you go anywhere.